Hello, Maverick Traders. Welcome out to your currency recap for August 19th. Corey here with you. We're going to take a look at meaningful news in the markets. We're going to look at commodities. We'll look at currencies. We'll look at crypto with the end goal of trading the very best setups possible. We're going to look at relative strength, relative weakness, and let that be our guide.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was another day where equities rallied, where it was risk on. This is getting to be quite the trend since the few Mondays ago where we put in that big exhaustion low. Equities have rallied for 8 consecutive days. Now a big bounce, not a surprise. This much of a bounce, huge shocker. Nobody would have predicted this much of a rally in such a short period of time. Markets are going to be watching the Jackson Hole speech coming out on Friday. This has historically been a time where the Fed could make major announcements. They're going to be pointing towards rate cuts. They've left 50 basis points cuts at this next meeting as, I don't know if I'd say likely, but certainly the door is wide open to that. So markets are going to be watching that close. Now, everything has gone more risk on. Aussie and Kiwi rallying with equities, US dollar getting hammered the last couple of sessions as the market, as risk on has taken hold. I would say the one area that's maybe not confirming that is the Japanese yen. And so the yen could still be the key component. It could still be the wild card as to whether or not we can rally in equities and sustain this upward move. But right now it's on a strong trajectory, and I wouldn't get in the habit of standing in front of speeding buses. So the S&P is up 1%, international markets up 1%, crypto slightly higher. Commodities, gold flat, but oil really got hammered the last couple of sessions. Oil down 2.5% today. Now, crypto-wise, this is about as flat as it gets. Bitcoin Cash was up 1.3, but essentially that's a very quiet day for crypto. As we look at the markets, you have to give credit where credit's due. Look, we've rebounded above the 20, above the 50, and importantly, we really gapped through that zone. And when you watch for gaps in the S&P 500, they're a signal of strength, right? They're added strength. They're basically big, powerful moves, and you can see how we rallied up to the 50 period and then gapped up and above it. That sets in motion more buying, just like some of these gaps down set in motion more selling, right? So gaps in the price action are key. They tend to have follow through, and that's exactly what you're experiencing here. We are in a risk-on environment in equities, and equities suggest that your positioning should be risk-on in currencies. And look, lately, the last few sessions, Aussie and Kiwi are still going to the upside. Now, as we look at the calendar, I would turn your attention to the end of the week here on Friday. Not only do we have Fed Chair Powell speaking, it's that Jackson Hole, which again, Bernanke moved the markets dramatically at a Jackson Hole. So I don't know, the Fed does use that. It's an economic symposium. It's a time where they will use it to potentially create more discussion points, bigger policy changes, things like that. I don't know if this is the big shift, and maybe they've been waiting for this symposium to kind of downshift and start to cut rates and so on, but this could be that turning point. And I think markets are somewhat expecting that, gearing up for that. Historically speaking, when you get into a big interest rate cutting cycle, it's not good for markets initially, because why do they cut? They cut because the economy's slowing, because job losses are piling up, because of something wrong in the system, and that's why they need to cut. So I wouldn't look at this as necessarily the positive that it's guaranteed to be, but the markets are rallying in anticipation of something, at least the economy to hold up or something along those lines. So a lot of things, I mean, certainly crypto, more neutral on the velocity side, but as you're stacking up velocity, The defensive currencies like the US dollar and Swiss franc weaker, CAD getting hit by weakness in oil, Aussie and Kiwi certainly more on the strong side. So what would be some potential trades? Well, buy Aussie, buy Kiwi, short the US dollar against it, that type of idea. Now, if we look at these possible trades, I'm just going to look at each one of these currencies by themselves. And the Japanese yen to start, huge run, massive run higher, big exhaustion high a few Mondays ago, and we've pulled back since. As goes the yen, this might be the driver for markets. If the yen downshifts again here and keeps plummeting, you are in a risk on environment. If the yen were to pivot hard to the upside, then I would be less inclined to bet on the Aussie and Kiwi rallying. I would certainly be less inclined to be shorting the US dollar and so on. So, which direction is the yen going to go? Can it bounce here, or do we break down again? If it goes lower, you're more risk on. You buy Aussie, you buy Kiwi, you short US dollars. If it turns up, though, all bets are off, and we got to get a little bit more defensive. As you look at the US dollar chart, we had been in a big trading range. That range was broken a couple of weeks ago, and it continues to move lower, sharply lower the last couple of sessions. Notice the price action. You broke support, you came up and retested it and failed. From failed moves come fast moves, and this thing is moving to the downside. You want another potential short. Looking at the British pound, it looks bearish. Bearish crossovers in the moving averages, bearish rally up underneath and starting to pivot down. So my favorite short is US dollar. My second favorite short, just from the charts, is British pound. So have we completely flipped to this risk off this risk on environment like equities are suggesting? Just, hey, take risk and bet on these things continuing. The struggle is the Japanese yen. If the Japanese yen confirms that and breaks down again, I think you've got clear sailing for another few days of trading that direction. But I want to see that yen kind of make up its mind right here, right now at this pivot point, and we'll see. That'll be a big driver. Hope you enjoyed the currency recap today. Have a great week, everyone. We'll see you next time.